So volatility is the name of the game. As you can see over here on the bubbles chart, the chop continues. And when that chop continues, it ultimately means that price is capped within a tight consolidation. And you can see that over here if you look at the Bitcoin volatility index here divided by the VIX. That's essentially showing you the prior times that volatility was low in Bitcoin, which ultimately led to major moves. It could either be to the up or to the downside historically. So if you take a look over here, let's quickly make that a bit bigger. Oh, there we have it. All right, so if you take a look at this over here, you can see that the volatility is starting to slowly pick up from the ultimate lows that we were at, and slowly but surely we are starting to pick up. Once you get above that 1.78 level, that's usually when the major moves start to take place. And if you look at the Bitcoin daily chart with the Bollinger Bands over here, you'll notice that the Bollinger Bands are squeezing incredibly tight. That paired up with the BBWP, which is a volatility indicator on the bottom over here, is also contracting into very low levels. What that basically means is there's going to be a big move within the next possibly day or two, I would say. And ultimately, you want to be on the right side of that move. So of course, you need to look at the pivot points. And once again, just like yesterday, as well as the prior 2 to 3 weeks, we are still stuck at that same pivotal level. And it's been a matchup between bulls and bears. Bulls trying to take control, bears try to take control. And consequently, you just move in a tight sideways consolidation. So if you look over here, what events could potentially drive that? Well, there's not too many important events that are coming out. I would say the main thing that we're going to look at today on the economic calendar is going to be the unemployment claims. Remember that bad news in this instance would be good news. The prior one was 198, and now it's expected that it's going to go up to 200,000 unemployment claims. The reason why bad news is good news is because that means that if those numbers go higher, it shows that the economy is contracting, and therefore inflation will hopefully not get out of control, and then the Fed doesn't have to raise as aggressively with the interest rate hikes. But this consolidation has led to a pattern which you call the tri-star pattern. The tri-star pattern, if you have a look over here, ultimately when you see doji candle, doji candle, doji candle, 3 in a row like that, that is what you essentially get. And if you look over here at Investopedia, that is essentially when you have 3 line candlestick patterns that can signal a possible reversal in the current trend, which could be bullish or bearish. But because price is coming into major resistance, if there's failure to get through this level and price starts to take out the low regions, I will give you those pivot points in a couple of charts time, then you have the risk that it's a full-on reversal back to the downside. So you're welcome to go and have a look through at this, but ultimately that's kind of where we're at now, right? We had a big move up now, and we have an even more perfect tri-star pattern than what you're seeing over here, because we have 1, 2, 3 right next to each other, as opposed to a rounding pattern like that. And as you can see, that leads to a major reversal. So pivot levels, if you look on the high time frame, is going to be that 27,157. As soon as you start to see candles close below that middle band of the Gaussian channel, that would signify that you're probably going to have continuation towards the downside. If you look at this chart over here, though, there is support. So on the weekly chart, we do know that the important moving averages are starting to trend back up. One of the most important for Bitcoin on a high time frame for the investors out there is going to be that 200-week moving average, which is going to be the orange one. Let me quickly get my little tool over here. I noticed I didn't have it. There we go. Got the tool back. So let's see what happens if price does start to pull down aggressively. Anywhere within this area is where you do want to see a potential bounce taking place. So we'll keep a close and keen eye on that. The next thing that we haven't looked at for a while is the liquidity. Net liquidity in the US is still technically ticking up, but it's very lackluster, nothing major. The Chinese, or the People's Bank of China, are still yet to inject new liquidity into the market. So for the past couple of days, this entire week, there's been absolutely nothing in there. And if you look over here at the overall major central banks, then in relation to what we previously had, this is still holding up strong, so that's okay. But you guys know the main one that you want to focus on for a sustainable, healthy run, when this starts to enter into a major uptrend in the same way that we saw all the way back, if I zoom out, this is when I start to consider sending my coins onto a hardware wallet and leaving it there for long periods of time, until such time as I see see something like this. I need to see this pick up gradually to show that there is health within the crypto markets. If we don't see that and this continues to trend down, then of course that's not going to be good. All rallies that take place are relief rallies, and we have to treat them as such. Okay, 4-day chart, looking at the short, medium, and long-term moving average over here. This suggests that any pullbacks that come into the green moving average, which is 26,000, again, opportunity for you to add to your long positions. Remember, using this chart, we would have been holding from all the way back around 19,000, so 18,800. I think that was one of my first streams that I did for the new year, so in early January, and basically you would have been holding those positions ever since, taking profits at certain points and just reallocating on the pullbacks. Let's look at this one over here. This is the one concern that we have, is the potential 𝗵𝗊𝗍 pattern. So I outlined that to you. When you look at that parabolic curve, the reverse parabola over here, there is a chance that this starts to break down. So I thought I'd put a 𝗟𝗍𝗍𝗵 in for you guys today, for the newcomers who may not know what the 𝗵𝗊𝗍 pattern in crypto typically looks like. Let me know in the comments if you are present. We didn't even do a quick roll call today. I see Jack's here, 𝗵𝗊𝗍𝗲 here once again. Welcome back, 𝗵𝗊𝗍𝗲. Andre, we got Duan, we have 𝗬𝗍𝗍𝗍, we have Ty, Jack, Dizzy, D, Big Slapper. All of you are in the house again. If you're new here, also let me know that you're new in the chat comments below, and give the video a like. It does help the algorithm to just get everything out there. Okay, so we're watching this chart over here. Very, very simply, you can just watch from the perspective of higher highs and higher lows. You can see very, very clearly that you are struggling to get above these regions over here. So you're starting to round that area. Now, if you start to take out this region, which is coming in at about that 26,900, then you start to lose your higher highs and higher lows, and you start to print what would be your next lower high, which is going to probably come in somewhere within this region. And then at that point, the next bounce that comes up, you definitely want to offload your positions, because you're probably going to get full on distribution towards the downside. So the 𝗵𝗊𝗍𝗵 pattern, for those of you who don't know, it pretty much follows his head. You get a big move up. Usually you have a consolidation at the top, and then it leads to the next major move to the downside. Sometimes these do happen the other way around as well, where you can get aggressive moves. So after a big sell-off, you can get an aggressive move to the upside down 𝗵. But in this instance, we have the right way around 𝗵, and therefore pullbacks would be for buying. You'd be looking for these low regions around that 25K level. Okay, next, let's move on over here. Looking at the pivot points, very simple. Keep it super, super easy. We just use the RSI with the reverse indicator over here. That suggests that 28,352 is the pivot point. If Bitcoin is below that level, that 28,352, it signifies that pressure is definitely towards the downside. And then pairing that up with the 9 exponential moving average over here, the blue one on the daily chart, once you lose that, you have additional confirmation, especially on a closing basis, that you're going to have follow through towards the downside. Now, remember, support is between 25 and 26,000. You do want to see price bounce anywhere around that region to set in what would then be the next higher low on a daily chart. So you have the lows, right? The lows over here, push up, create a higher high, and then somewhere around here potentially create a higher low. That could provide a nice buying opportunity with an easy invalidation point. So we'll keep a close eye out on that. Again, with the pivot point, if Bitcoin can get above $28,350, then pressure does continue to remain towards the upside, and bulls take back advantage again. So it's like a tug of war at the moment, where you're right on the line. Bulls are pulling to one side, bears are pulling to the other side, and we are yet to see who the victor is going to be. Usually this takes a little bit of time to play out, but you can look at the volatility indicators, which provide a statistically significant chance that it's inevitability that price will break at some point, either up or down, and some point being very, very, very soon. So, in other news, we have also a trade that we set up over here. This was on natural gas. I do want to remind you, we gave that a couple of weeks back. It was also put in the Discord group. We were looking at this area over here. Let me put it onto a higher time frame and show you just for some perspective. So here's natural gas, right? There we go. We're looking at natural gas. Massive, massive sell-off, almost worse than Bitcoin. What did this come down as a percentage, actually? So from there to there, Wow, absolutely terrible. 78%. So you can imagine not really any real relief rallies other than this little one that happened in October, where you had a big spike up to about $7.60. Since then, there's been no real relief rally. So if you can place a very, very small bet, which is what I did, somewhere within this region. Why this region? Well, a couple of reasons. This was a prior range that was important. Here you have the range high, here you have the range low, and the mid-range. And then we have a long-term trend line which held since 2020. We're looking for a potential reaction off of that zone, which is why we laid some orders in there. Now, if this area gets taken out to the downside, we'll then look towards the mid-range. But imagine a very small reaction from this zone over here could provide with massive, massive returns. Remember, when you trade things like natural gas, these are quite highly leveraged positions. So I'm using PrimeXBT. I've taken the trade over there. Everything is still in the Discord. You might have to scroll back. We'll have to bring that thread back down to the latest info so that the new guys can see it. But go and have a look over there. Everything is there. Currently, we're in the money over here. It's in profit. I'll probably start to raise my stop back to at least to where I'd break even. And then let's see how the weekly chart closes over here. But if we even get one spike like we did over here back in February, that would provide for enormous returns. I think I'd be looking at something like possibly a 7x return based on the leverage that Prime provides. If you are looking to trade things like this, check out in the link below. There is a sign-up bonus for you if you use Prime. You have to type in the promo code, though, Kyledoops. You'll get up to $7,000 in sign-up bonuses on Prime. You can trade commodities, stocks, as well as crypto. So that's the natural gas one. All right. Yesterday, you remember I mentioned very, very clearly that you want to be very, very careful around this region if you are taking longs and you weren't in from way, way earlier. Because why? Well, I gave you 3 reasons. Number 1, Bitcoin is definitely coming into resistance. Number 2, you have the S&P 500 coming into resistance. Number 3, you have the VIX, which is also at historically low levels where typically it bounces out of that area. And that leads to downside moves when the S&P 500 is coming into its resistance zone. And I can even give you the 4th reason would be the dollar. We have been looking for the dollar to bounce. It went a little bit lower than our initial targets, but nevertheless, we still have that same thesis. We're looking for a little bit of relief in the DXY, which would obviously put pressure on the rest of the risk on assets. So here we have it. Here's the range. You can see almost touch the exact tippy top of that range high coming in at 41.83. But if you look here, you can take a yellow trend line to create the pivot point. So that was from touch point 1, touch point 2, and that one lines up as a double confluence with the range high. So is price capped over here? That's the question. Is the S&P 500 going to retrace all the way back down to mid-range? Well, we'll need to observe it and take it one step at a time. What I would say to that is if the dollar does start to catch a bid over here, if this is in fact the low for the dollar. So remember, initially we're looking for this bounce to take place a little bit higher, somewhere around here, and then obviously got caught a little bit by surprise in that it came lower down. So this could still potentially be the bounce zone. Remember, I told you yesterday, usually when I feel like, okay, I'm going to throw in the towel on this trade idea, that's usually right when it reverses. I know a lot of you out there probably feel the same way. And yesterday it felt that way on the dollar. Not that I was short on the dollar by any means, but I was just looking for this area to hold, and it didn't. Okay, so nevertheless, you still have higher low after higher low. If it starts to recapture these key levels, once the dollar or the DXY starts to get above about 102.6, then you can say it's most likely a confirmed higher low. And then you want to push above the 103.5 area, key yearly level on the right-hand side. And then ultimately, the final upside target might be around that 104.8 level. So percentage-wise, still quite a big move over here. Let's just quickly grab our measuring tool. Percentage-wise, that could be about almost a 3% move on the dollar. And that's going to provide, obviously, pressure to the downside, right? It's going to add pressure onto these risk-on assets, whereby this could potentially move all the way back down to its mid-range. So percentage-wise, what would that look like for the S&P 500? Well, you're looking at percentage-wise 4.7, 4.8% move to the downside. Now, you can imagine for crypto, that would obviously send crypto down quite a bit as well. Let's look percentage-wise to the next support. This would be about 9-10%, right? So Bitcoin moves at about 2 to 3 times the pace or the beta that the stock market would. So that does make sense. It kind of lines up. Let's look at total 2. Yesterday, total 2 is looking fantastic. I told you, you don't want to front run all of this stuff when it comes to altcoins. Really just be patient and wait for the close. You can see we're yet to close any candles above the red box. The red box coming in at 612 billion. So when these things start to break out officially, I mean, you can even be that patient that you wait for complete clearance of the range and then buy pullbacks that would only come much later. Timing wise, if it followed this trajectory, if you look at that, that would only line up around May, June. So it's still a long, long way away. You don't need to rush into altcoins. There will be plenty of time. Let's look at total 3. Okay, total 3 over here. Quickly click on that. All right, here we have it. So total 3, once again, failing to get through. So the long-term downtrending trend line, double confluence of resistance over here with the range high, the orange line. And again, you can just see it. It's wick after wick after wick. Every time altcoins push into this region, big guys are offloading those positions, and that's what's creating that selling pressure towards the downside. So same thing as total 2. It's better to be patient and wait for the proper breakout and then retest within this region, and then you can start to get long somewhere around there, which is actually almost at the same price. So for full disclosure, let's quickly pull this across over here. Here you go, you can have a look. I updated everyone yesterday. I said, here we go. Long was the Bitcoin long was stopped out. We took half profits at TP1 though. ETH took half profits at TP1. The rest is still running. Rune position was stopped out in minor profits. And then the only trade that's still open is Ethereum, raising stops until most likely follow Bitcoin. So probably follow Bitcoin to the downside. And therefore you want to hold on to those profits. So for the most part, I'm pretty much fully in cash or stable coins. I know people always try to fault me on that technicality. I'm in stable coins at the moment, so not really holding any major positions. I'm waiting for this pivot point to be confirmed, whether it's going to be up or down. Once that happens, as usual, make sure you follow me on Twitter. That is where I'll immediately update you, as well as the guys in the private Discord group over there. Again, if you want to get into the Discord, the link is in the description below. It will show you what to do, and you can get into the Discord group there, and I'll update you on my every single move that I take. The super guppy indicator over here, which is essentially a conglomerate of different exponential moving averages, is continuing to show that the trend is shifting towards the upside, and it is continuing to hold green. So for the most part, if you are trading this strategy, then dips that take place are mostly for buying. So when I say these things, guys, depends on what strategy you want to employ, right? When it comes to trading, there's hundreds of different strategies and approaches that you can take. You might be a range trader, a trend trader, a scalper, a day trader. There's so many different approaches. If you're a trend trader, the trend is definitely towards the upside, and you're looking to buy the next higher low. If you're a range trader, then you're looking for a new range to get established. And at the moment, looking at this chart over here on Bitcoin, you're failing to break above this key pivotal point. Again, same thing as what I showed you with total 2 and 3, how the selling pressure kicks in every time that price gets within this box. This box being between 28,500 and about 29,200. That's the region. Let's be precise, 29,189 there to be precise. The selling pressure kicks in. If you're a range trader, very, very simple. You would then be looking for your shorts, right? You would have your entries over there. Every time price comes in, stops above there, and you're looking to short it all the way back down to the $25,000 support. So let's make this a bit brighter. I know you probably can't see that. There we go, 64. That should be better. Perfect. So that's kind of the trade setup that you're looking at on Bitcoin if you are a range trader. If it starts to gain acceptance above this level, then you'll start to flip your bias and you'll look for longs from here to here. So what do I mean by gain acceptance? Well, you'll need to zoom in on a low time frame, but you're looking for something like this. You're looking for at least a daily close within this region, and then you can start to target higher prices. So let's zoom in to show you what that would look like. There you go. So if you look at the moment, what's going on over here, it's starting to look like a distributive pattern, right? You'd want to see price start to push back up and hold within this region with daily closes. And then slowly but surely, you want to see a bit of an uptrend established, right? So when it comes on a low time frame, you want to see this sort of a pattern, right? And then you want to buy those next high lows that get set in, and then you can start to target towards the next range high, which is probably going to come in around that $32,000, $33,000 level. Let me know in the comments, does that make sense? I hope that helps. I'm trying to keep it very, very basic, very simple, because the truth of the matter is that not much has changed within the market. This is just a choppy range, and we're still waiting for resolution from that range. Let's see in the comments over there if you guys get that. Does that make sense? You guys say, yes, that makes sense. Just wait for the feedback to come through over here. It's a little bit delayed.
15 seconds. They're also asking for the moon phases.
Oh, the moon phases. That is a phenomenal question. Yes, let's have a look at the moon phases. Here it is. Okay, so that's why the pivot point's important, right? I see you guys say yes, 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 yes. Everybody understands. That's fantastic. You guys are a super, super intelligent audience, and I've always been very lucky to have you guys. So it makes my job very, very easy. Okay, moon phases over here. If we take a look at the moon phases, there is going to be a bull moon that should be printing. I think it's today. I actually woke up this morning and I thought, oh my gosh, what is that bright light outside? We're going into winter over here on my side of the world, so it's still dark when I wake up in the mornings, and it was a full moon. So the full moon is arriving. I think it prints today, you can see. But remember, you don't want to trade these moon cycles blindly. Although, funny enough, if you did, you actually probably would still do pretty decently, because I think it has about a 70 to 80% hit rate. Meaning, right, for those who are new, you put this on, the moon phases. Now, we're not into astrology over here on this channel, just before you guys turn off the show if you're new. But it's just interesting how it works. When you use it in combination with other indicators like this RSI, which shows the pivot points, then it can be incredibly useful. So if we start to recapture that 28,350 pivot point today, and you have a print of the bull moon, and you have a clear and easy invalidation with a level that you can invalidate under, where would that invalidation be under? So probably at the moment, I would definitely have to say it would have to be those lows, which is unfortunately a lot lower down. If we start to close a bit higher, then we can move this up, and then you have something to work with, right? Then you can say, okay, now I have an opportunity to go long again. Bull moon is there, pivot points have been taken back, volatility is low. We're looking for an expansion off with that volatility, but this could still easily turn back down. That should not be your first source of truth. The first source of truth should be the structure of the price action, right? Higher highs and higher lows, lower highs and lower lows, ranges. Are you losing a key level or are you gaining a key level? I've said this to you guys many times before, right? In trading, you need to ask yourself those two questions, right? Did I just gain a level or did I just lose a level? When I say I mean the asset, right? You're trading Bitcoin, let's say. So did Bitcoin just gain an important level or did it just lose an important level? So what can we say right now? Well, obviously we gained a lot of important levels along the way, but at the moment, failure to get back above 28,500 means you'd be losing an important level, and therefore the pressure is towards the downside. There is risk that price goes lower. Once you get back above this level though, then you can successfully say, congratulations, you gained a level. So like over here, right? We were struggling, boom, clearly gained that level. We gained this level over here. Now we're struggling to gain this level. That means that maybe price will be capped within this range. If you can successfully gain this level, then price might be capped within that range. So this has really been the lesson of the week, is that we're really looking for a new range to get established. And the question is the range going to be traded between 25.5 and 28.5 for the coming weeks? Or is the new range going to be traded between 28.5 and about 32,000 for the next couple of weeks? So range high, mid-range, range low. I'll say it again, range high, mid-range, range low. Which way is price going to go? That's what we're looking for. Okay, next, quick mention for Bitget. They do have a launch pool that's currently running. So with these launch pools, if you currently hold any of these tokens, let's say you're holding them in spot and they're anyway part of your portfolio, maybe a dollar cost averaging into them or something, then you can consider staking them because you're earning pretty decent APY. You can see on the BGB pool, so the Bitget token, 64%, Bitcoin token, 79%, ETH is giving you 60%, 60%, 68%. So there's a whole bunch over here. If you look at, you have ARB, you have Grail, Grail's giving you 76%. All you need to do is you click on one of these, check if your coins are listed on here, add them into that pool. You can unstake it at any point and you get paid out, I think, every hour. So every hour your ROI will be paid out towards you. Your staking rewards will be given. There is a link in the description below for that as well. Here you go through to 𝗍𝗵𝗍, go through to Bitget. You get $8,000 sign up bonus over there. And then, by the way, if you do use these sign up links, that will also get you into the Discord group. All right. Let's go on to the low time frames now, and then we can finish off with that. So I'm going to quickly take a look at this over here. This is Bitcoin, of course, Bitcoin on the 4-hour chart. You can see that yesterday we got stopped out once price wicked through because we moved the stops back to break even. So I told you have the option. You could either re-add into that position to go long again. So your profits that you took at TP1 here, you can re-add into that position, or you can pretty much cancel this trade and just wait for a new opportunity. Here's the Ethereum one. Ethereum ran a bit harder. We almost made it to TP2. I would be stopping out the rest pretty much around here so that I can bank those profits, because most likely Ethereum is going to follow all the way back down just like Bitcoin did. So I'm going to be deleting these trades because, at least in my book, these trades are done, and then we'll take it from there. Okay, those trades are over. So what now? Very, very simple. It's just a range. We know that this range is going to continue until we get resolution above the yellow line above or the yellow line below. We don't really know where the next major move is going to go. We need to see this take place first. So you can see you had liquidity grab, right? So this was a liquidity area, big spike through, liquidity grab. Now you have this area over here looking for that liquidity to potentially get taken. I wouldn't be surprised to see Bitcoin, especially over the course of the weekend, come all the way down, break below, recapture this, as well as recapture the 200 EMA on the 4-hour chart, and then it can start to move back up, right? And then you still have a potential flag that's formed over here. Otherwise, the alternative is that it's obviously going to roll over and the 𝗏𝗏 pattern is going to play out. But either way, I'm not really looking to establish any new positions unless I see major strength within the market, because this is taking quite a long period of time, and bulls should already have made their move. They should have already sent price up. I think that it's on the verge of starting to take a little bit too long for my liking, and therefore I would start to lean towards if bulls don't take control very, very soon before the end of this week, then it's more likely that bears are going to take this and they're going to send it back down. So I'm just going to wait for clear guidance. Remember, I went fully long with pretty much my whole portfolio at 19,700. So I might be in a different position to you. I'm very, very happy with my profits. I closed all of that out at about 28.5, and now I've been looking for small trades here and there. Okay, so that's what we're watching over there. Ethereum will pretty much be the same thing. It's also kind of caught within a similar range over there. So you want to see Ethereum hold above that key quarterly level. If you see a sweep back down and it holds above that $1,821, it's the key quarterly, and it's also your 50 EMA, which is currently trending up. That could be an opportunity to get long on a sell-off through that level, reclaim and hold. Then what do you have, right? You still have high, low, high, low, high, low, and then you still have potential higher highs that are forming, looking for the next major push, which was the ultimate take profit on our previous trade, coming in at $2,000. That's about it, guys. I think that I've covered pretty much everything. I hope that helps. Let's see, is there anything else? No, I think that's it. Pretty quick show today. Please make sure that you give the video a like, hit the bell notification, and then subscribe to the channel. Where's the bell? There we go. Hit the bell notification and subscribe to the channel. And then I will see you all only next week, guys, because it's actually a long weekend. It's Easter, so happy Easter to everybody. And then we'll catch up soon. Cheers for now.